Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. And if you caught our market report last week, you'll know that the line that I drew here, let me zoom in for you, this line, this diagonal line that I drew last week was my forecast line. And last week's report went out right here on Friday, and that is the 27th. And remember, when I put out that report last week, these candles were not there. It was just a blank canvas, more or less, or an empty chart, and I drew that diagonal line with the end of that line being my target price. And you can see that the S&P did move up as I forecasted. This long shadow from yesterday tells us that the buyers are moving in to the market on the S&P. So what I'm going to do is I'm just going to extend my line here because I think next week the S&P is going to go a little higher. So I'm just building on to my forecast from last week and showing you where I think the target price is going to wind up. This long green candle is also on higher buying volume right there. So again, that supports the idea that the S&P can go higher. If you're not using candle charts as your preferred tool for forecasting, I would encourage you that you learn more about it. Stick with the market guys. Will show you how to read the signals because it's extremely accurate for a forecasting tool, and even more importantly, it's a great tool for managing risk because when the signals break down, it gives you the exit point so that you can minimize that loss when the market starts moving against you. Now, if we look at the Qs, that's the Nasdaq market, also known as the power shares, QQQ. My forecast last week was that the market would go up early in the week and then pull back. Again, with the end of that line right there being my target price. And you can see Monday, Tuesday, Wednesday, we rallied right in line with my forecast. And then on Thursday, we actually hit my target price right there at the end of the line and then bounced. So what does that mean for next week? I'm going to have to move my scale down just a little bit to give you that forecast. I think that we're going to continue higher on the Nasdaq, especially with some of the news that came out in the tech sector. Apple also came out, set record highs once again. So that's adding some momentum to the buy side. Now, don't get irrationally exuberant, as Alan Greenspan would say. The excitement that's coming into the market is basically built on earnings news, and so we are expecting a correction in the market eventually, but for next week we still have some earnings coming out, so it could propel the market a little bit higher as we move towards the end of the year. So there's my forecast for the Qs. If you look at the Russell 2000, this is the RUT, it's the index for 2,000 stocks that it tracks. You can see it's a more broad-based index. And I said that we would move up, but I also said we would pull back. And you can see here, Monday, Tuesday, Wednesday, we came very close, almost within pennies of hitting my pivot point, and then we came right back down. So for the Russell 2000, I'm going to erase these lines because I can't really extend or build on them, and I'm going to draw what I think is going to happen for next week in the Russell 2000. I think we're going to go right back up to test resistance up here. Okay, that's the highs that we're connecting in that horizontal line. And one of the reasons I think the Russell 2000 is going to go higher is because if I zoom in, you'll see there are some long shadows under the candles right here. These long shadows, this is known as a hammer pattern right there, but these long shadows under the candles tell us that the buyers are fighting back against the selling pressure. So in other words, the sellers tried hard to push the market down, and towards the end of the day, the buyers came back and pushed the price back up. So that's a bullish sign. So we're going to take that as a positive forecast for next week, again with resistance being right here up at the top. Now the Dow Jones Industrial Average, through ticker symbol DIA, did not follow quite as well as the other forecasts. We did pull back earlier in the week, but then Thursday a bullish engulfing pattern showed up right here. That bullish engulfing pattern, again with a longer shadow underneath the candle, tells us that the buyers are still moving in to the Dow Jones Industrial Average. So my forecast for the Dow is going to be very similar to what we saw in the S&P, the Qs, and the Russell 2000, as I think we're going to continue higher, and then we're going to have to watch to see if there's any kind of a drop in volume. Once we see the drop in volume, that's telling us then that the buyers are starting to lose their momentum, at which time we will then move to protect our positions against any kind of a downturn or a correction and possibly move to cash. But right now we're sticking with the momentum to the upside. Now finally, the VIX, ticker symbol VIX, that's the volatility index. And again, if you followed along from last week's report, you'll know that what I did on the VIX is I forecasted 2 weeks out, not just 1 week. And you can see I did say that the VIX would pull back and bounce off of this well-established support level, which I drew here from these lows. You can see this week the VIX pulled back exactly like I said it would. And now the forecast line is going to stay in place for next week because, again, I forecasted out 2 weeks. So we'll leave that in place. It's following perfectly. And then once we start to see the VIX rally, that becomes a little bit more bearish for the S&P and the general market. So keep an eye on the VIX as your best leading indicator. Finally, if you'd like to learn more about technical analysis, just go to themarketguys.com. And right at the top of the page, there is a link that will bring you to our video library. Click on that link, and there you go. It'll show you how to draw lines. It'll talk about the rubber band effect. It'll talk about gaps. This one video right here, the 1% rule, in my opinion, is the most important video you could watch because it's all about risk management and learning how to minimize your risk. Imagine if technical analysis is that accurate for the general markets, what can happen to your trading investing if you apply these concepts to your investing and trading accounts? This is why I've become more or less an ambassador for technical analysis. I want to teach people how to read the charts, and the best way to do that is through repetition and following along with the signals. So have a great rest of the weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.